The Federal Reserve and how it manipulates the interests in the market. The United States Federal Reserve, also known as the Fed, manipulates market interest rates through its monetary policy. Monetary policy is the set of actions and decisions the Fed takes to control the money supply and the interest rate in the economy. Here's a simple explanation of how they do it. Reference interest rate. The Fed sets a reference interest rate known as the federal funds rate. This is the rate at which banks can lend money to each other for a short period. It's crucial because it directly affects the interest rates that banks charge their customers. Buying and selling Treasury bonds. The Fed buys and sells U.S. Treasury bonds in the open market. If the Fed wants to lower interest rates, it buys bonds, increasing the demand for bonds and causing their prices to rise. When bond prices rise, their interest rates decrease. This, in turn, pushes down interest rates on other loans like mortgages and car loans. Bank reserves. The Fed can also influence the interest rate by adjusting the reserve requirements that banks must meet. If the Fed reduces reserve requirements, banks can lend out more money, increasing the money supply and potentially lowering interest rates. Communication and expectations. The Fed uses public statements and speeches to signal its stance on the economy and its intentions regarding monetary policy. These statements influence market expectations, which can, in turn, affect long-term interest rates. Inflation and economic growth control. The Federal Reserve also employs its monetary policy to maintain price stability and promote sustainable economic growth. If the economy is overheating and there are risks of high inflation, the Fed can raise interest rates to cool down the economy and prevent excessive price increases. In summary, the Federal Reserve manipulates market interest rates by regulating the money supply and the reference interest rate, buying and selling bonds, adjusting reserve requirements, and communicating its economic stance. These actions aim to maintain economic and financial stability in the country.